Hi and welcome to the Trading Bell. Now today we have quite a successful story to speak about. I'm talking about TransCentury Group, an institution that has turned around, and we have the conversation right here with the CEO, the group CEO, Njiinu, to help us understand what are they doing good and what's in the future. But first, let's take a look at his profile and then get started.
Njiinu has over 20 years experience in investments, strategy implementation and operations. Since joining TransCentury Group in 2008, Njiinu has held various leadership roles in corporate finance, portfolio management, business development, as well as originating and developing opportunities in the infrastructure space. In addition, Njiinu has had deep experience in developing infrastructure projects in the areas of mining, energy, rail and roads. Since taking up the role of CEO in 2016, Njiinu has led the group through an extensive restructure that has led to the reduction of debt by 55 million USD and the restructure of the 52 million debt, in addition to a group-wide organization redesign reflecting group's strategic direction. Under his leadership, the group has attracted over 50 million USD of additional funds into the business and successfully exited infrastructure project and portfolio investments. Prior to joining TransCentury, Njiinu worked for Coldwell Banker Residential Brokerage in the USA for 7 years, where he oversaw strategic initiatives, financial planning and analysis, as well as evaluation and integration of acquisitions. He holds an MBA in Finance and Investment Management from the University of Dallas, Texas, and a Bachelor of Science in International Business from the USIU.
So Njiinu, welcome to the show.
Thank you very much.
Yes.
Glad to be here.
I'm certain that this is the first inaugural one with you, and much appreciation. But I would like, for the sake of our viewers, to just quickly mention, because we have called this TransCentury Group, how many companies or which are the companies under TransCentury, if you don't mind?
Yeah, thank you. So the way TransCentury is set up as a platform. So we purely invest in infrastructure, an infrastructure investment business. Yeah. So we can either own infrastructure directly, or we can work within infrastructure by supplying products through businesses that we own, constructing infrastructure, and the other vertical is managing, maintaining, and operating infrastructure. So some of our key businesses you're going to see is the East African Cables Group, that is Kenya and Tanzania. There's Tanalek, there's AA, and then there's Transformco in Zambia. Okay. So that's our current holding.
Okay. Yeah. Quite an array there.
Sure.
And I'm sure you have a regional view then, because I've heard you mention Zambia and many other places.
Yes. Yeah.
But the successful story is on your latest announcements, and we saw a quick turnaround. You're coming from a place where you are quite on the reds, and now we are talking positive because you return a profit of 580 billion, right? That is in your financial year 2024.
That is correct, yeah.
I just wanted to understand what are some of the decisions and the difficult decisions you've had to make to get to this, and the movers of these profits?
All right. Yeah. So if you look across our profit and loss, you see the drivers of this solid performance will be that consistent revenue growth over the years, about 50% in the last few years. You're looking at improved margins, profit margins, especially the gross margins. And then below the gross margins, you're going to see just that disciplined execution containing our costs, improved balance sheet. So we're reducing our provisions, remarkably. And then you're also going to see the effects of better foreign exchange management, which is really broken into two. If you look at unrealized, which is the revaluation of our forex denominated liabilities, we've done a lot of work there to take a position which has really rewarded us. And in terms of realized, which is really an aspect of procurement in dollars and how much you sell. So from contracting to fulfilling your contracts, we've been able to manage very well and hedge very well. So that's why you saw a profit gain. But across the last few years, we've had to do extensive restructuring of our businesses. Cost rationalization, realigning how the businesses work, and making some decisions around both the leadership and culture to be able to support our turnaround.
Wow.
Yeah.
I have a quick question on that. What's the size of your employee on average, if not exact, that you have under the entire group?
Yeah, right now it's going to be around or under 400.
Wow. Okay.
Yeah,
Quite a number. Quite a number
that's
there.
correct. Yeah.
Excellent. So let's talk about this turnaround strategy, which also happened during a period of adverse lender actions, because we have seen the notices, we have seen the things that have been happening around, and I don't know how you're handling that. So can you elaborate more on these actions and how you've had to navigate these challenges?
Yeah, good question. Yeah, so I know it's been in the media. One of our lenders took the decision to accelerate some actions to recover some of the loans that are due. Absolutely. We are working very hard to make sure that this is resolved amicably. It's a great business. I think part of it is what you have seen as profits. Now that you're talking about some positive multiples, that helps in our conversations. There's a lot of work that has gone into it, and we hope to resolve this as soon as possible because it was quite disruptive to the business.
Okay.
Yeah.
Let's zoom in then back to the results and really wish you well in terms of this whole period that you're about to face with the courts. Let's talk Matters profit. Rose by 27% as you have alluded in terms of growth, but you also recorded exchange gains of over 1.2 billion. Quite remarkable. I wanted to ask about how sustainable these gains are, because definitely your investors are more concerned about how can we have consistent returns on the go, and what extent did currency management strategies contribute to the bottom line?
Right.
Yeah.
Yeah. So when it comes to gross margins, you're going to see that we moved from about 28 to 34%. So improved our gross profit by 27%. The initiatives there are focused on high margin products, and you're going to see better execution, especially on the production side, and more efficient management of projects. So these are initiatives that we shall retain. Sustainable. They've gotten us to a profit where we have profit level, so that's good, and we have built this into how we operate. I mean, there's going to be decisions in the future that we need to make, but for now, I can tell you that it's on the back of initiatives that are sustainable. For currency, we are always looking at currency management. I mean, some areas we sell in dollars, some places we procure in dollars. So it's just creating that natural hedge, and also ensuring where we have dollar or forex denominated debt, we make the right decision on which side to stay at, whether it is to convert or to hold. And we continue to get value out of that. And our teams are actively looking into the future to see which position should we hold.
Absolutely. Yeah. And just zooming in a little locally here in Kenya, where you also operate largely. I think I remember speaking to one of your CEOs at the East Africa Cables, and one of the key challenges was cheap imports coming in left, right, and center, which can also pose as a challenge to the local manufacturing. Why I'm painting this picture is to ask you, when you look at all the companies that you are operating as a group, are you about to make some tough decisions? Because we're in a changing environment, definitely, where the world is becoming a village where now people can cross trade at all. Are you thinking maybe strategically of probably either adding more companies or even probably closing some? That's up to you.
So we are an investment business, and we look forward to adding businesses in our stable, and that's something we are open to doing as we grow our businesses. But our current holding is a mix of businesses that is put together intentionally to be the way it is. We've got AEA that constructs infrastructure, and then you've got ESC and Tanalek that supply products into infrastructure. They all can expand their scope up the value chain, whether it is addition of new products or going down to other sectors of infrastructure. So we are kind of excited about the future of our businesses. When it comes to making tough decisions, that we've already done in the last couple of years as we restructured out some of the businesses that were not meeting our return expectations. We're probably asking for just a bit too much capital and attention than we could be able to provide during that restructure period. So we are happy with the businesses we have. The future is great as we see it. We just need to sort out one or two things in terms of capitalization.
You just reminded me of Tanalek, and I had the privilege of going down there. Impressive work.
Fantastic business.
I mean, we had a conversation with the chief, and it was amazing what they are doing.
It's a great business.
And even supplying down there all the way to Zambia, I believe.
Exactly.
Quick question: how is it doing now? You're the man.
No, the business is doing great. I mean, I think spreading all the way down to Mozambique and into DRC, going up again in the value chain to bigger transformers that no one else can make within the region. So we are excited about their innovation and diversification.
Okay.
Yeah.
All right. Let's move on a little bit more now to the fact that we are celebrating the return to profitability. And one of the key things I noticed when you released the results and even the presser, the auditor raised concerns about the going concern on risks and citing breached loan covenants and liabilities exceeding assets. How are you addressing these red flags? Because everybody wants to know that we are well catered for.
So we are actually working day and night to make sure that we fix that situation. I mean, some of the gains or some of the starting points that we've been working on is to make sure that we grow our top line and we are profitable. It starts a very good conversation around some of the restructures we are doing in our balance sheet. We've made tremendous progress. While we are very excited internally about the gains we made, there are procedures and standards to reporting. So we expect this to start now being reported in the next reporting period. But you see a lot of legacy issues fall out of our balance sheet, and we start to fix that. Plus now the profitability, recapitalizing our business through retained earnings should improve our balance sheet as well.
Okay.
Yeah.
I'm just recollecting my memory, and I remember, I think it was sometime last year when you had a rights issue. And now definitely with this kind of results, what does this speak to your investors? Are you projecting positive and moving on even a positive return?
Right. Yeah. So we are happy about the positive multiples, and we've been talking about the improvement that you're seeing in the business, and expecting that to come through in our income statement. Now that is coming through, and we are projecting improved business performance going forward. Okay. We expect this to continue the positive vibe out there, and assure all our stakeholders to give more support.
Okay, excellent. Yeah. So looking at your subsidiaries, I think we have spoken about East Africa Cables, a bit on Turnelec, and then we have AEA. And I wanted to ask you about AEA. You reported a 37% revenue increase in this subsidiary, so despite the capital constraints. So what are the lessons from AEA on resilience can be replicated across your group that you're seeing?
Right. And resilience is a key word there. I mean, it's really about building businesses that are able to pivot whenever there are challenges, and building businesses that have that operational discipline and excellence. Having a cost base that you can manage and be able to work off of it so that the top line, as you grow your top line, you're actually delivering a bottom line for the stakeholders. So it's really about building businesses that are resilient. Okay. Yeah.
For the sake of the viewers, please let them know what AEA is.
AEA is used to be called Avery East Africa. It's a business that does construction of infrastructure, also supplies specialized infrastructure products for management of infrastructure, just longevity and efficient use.
Okay, excellent. Thank you so much for that. I want to move on to your capital structure and future plans as we come and nearing the end of this conversation. So you have mentioned about your continuous focus on capital structure optimizations, even on your presser as well. So are we likely to see restructuring, equity injection, or divestiture in the near term?
Right. Yeah. So we'll continue to focus on restructures. We've got some legacy impacts in our balance sheet that we probably should not be there. But our goal here is to have a strong balance sheet and a capital structure that works for us. Okay. You're going to see us look at our debt structure from the tenors to the repayment structure, such that we are matching with the assets we finance, and we are able to get a bit more capital towards production. So that's something that will continue to happen within our business.
Okay.
Yeah.
Njiinu, anytime we hear profits, shareholders are like dividends.
Yes.
I want you to address it because I didn't hear you make an announcement on it.
Right.
Yes.
So We want this to be as soon as possible, but what we have to do is that we have to recapitalize our business. You know, the best way, the most sustainable way is through retained earnings. We also need to build our reserves. It's a requirement that you pay dividends from reserves. So we are looking into that. We are working very hard on that, and also what we would want to see, what we are hoping to see, is the improvement of value of the shares in the stock market, which somewhat increases or improves the valuation for our shareholders as we work in the short term as we work on the dividends. And we've seen our share price respond positively in the last one.
It's done very well.
Yeah, year to date. So we're happy about that as well. Yeah.
So at least there's some hope in the near term.
There's some value coming through.
Value coming through.
Yes,
I
at
like
least.
That.
Yeah.
Quite optimistic there. Yeah. And as we come to a close, let's talk about your outlook and risk. So you mentioned definitely in the conversation about your divestiture from non-core assets, even on your presser, you also talked about divesting from your non-core assets. I wanted you to highlight what are this and how much do you hope to unlock from them?
Right.
Yeah.
Yeah. So one key thing for us is that we keep looking at our assets, the return on those assets, and what value they bring through. So I know we have announced divestiture from East African Cables Tanzania. That's been in the news.
Yes.
We are constantly looking at any assets that we can monetize to either reduce debt or to increase our working capital towards so that we can increase production. I mean, the opportunity out there is massive. What we need is to put working capital to work, give us a top line, and ensure that we are reducing our cost of debt so that we can have a good bottom line.
Okay. Yeah. So what's your biggest risk that you're now looking at in 2025 as you look at growth at TransCentury now?
Yeah, whenever we do a scenario analysis, and we do this quite a bit, we always looking at, of course, the availability and cost of funds. On the other end, infrastructure is impacted by government policy as well. The good thing is that how our business is built is aligned with the regional infrastructure plans. Of course, macros are important. From currency movement to interest rates, and so we are looking at our business and our practices and how we finance our business to make sure that the impact is. Or at least we hedge operationally one way or the other to make sure that it's not a major impact to our business.
Okay.
Yeah.
I must ask you this, and I know I didn't prepare you for it, because anytime businesses are operating in the region, there's always regional dynamics. It's interesting that you have such a successful brand and growth in one of the countries that is referred to a bit differently to Kenyan businesses. I wanted to ask you, you seem to have cracked it, and there's so many businesses that would want to learn from you. One of the key questions then will be to any business person looking at you, and what would be your key advice to them when you're thinking about expansion in the region, because you have a regional perspective as a group head?
Right. Yes. Yeah. So I think for us, one key thing is stakeholder management. Okay. I mean, you have to actively manage stakeholders and align in terms of, for example, in infrastructure, it's critical, it's core. The government has to invest in infrastructure for the economies to grow, and where they don't, as the population grows, consumerism and the like, private sector would demand infrastructure. So it's core to how an economy operates, and then you manage our stakeholders very closely. And I think as long as you're aligned, you're delivering, you can anticipate any issues and resolve them.
Absolutely.
Yes.
Finally, you have to talk to your shareholders. They're here, they're watching. They're happy that they're back to profitability, but what's your word to them in terms of the future outlook and a return for the investment?
Right.
Yeah.
Yeah, I mean, suddenly we feel very good about the future of this business. Yeah. We invested in the right sectors. I mean, and this is shining through every day. Yeah. As we fix some of the legacy issues, you can see the leaps we are able to make. We are working on fixing what was a challenge, which was our balance sheet and the debt situation. And we believe once we do that, we go back to the market where we are able to raise funds for normal operations in a normal manner. We can be able to utilize our capacity headroom, because the capacity utilization across the group is quite low. So we actually do not need to invest to be able to grow the business substantially. And ourselves, we are quite excited, and I think the results are starting to show.
Wow.
Yeah.
Njiinu, thank you so much for your time.
Thank you. Happy to be here.
There you go.
All right, thank you so much.
That's Njiinu, the Group CEO, TransCentury, very optimistic that they have now returned to profitability, and that's the trajectory. They're not going back, which is very good news for you, the investors and people who look up to the success of this particular company. Thank you so much for your time. I leave you now with the markets.